security of supply, one of the key themes at this year's Mining Indaba, and you are seeing it translate to increased activity in the mergers and acquisitions space this year. Tell us more about that.
So in terms of what we're seeing driving security of supply, specifically within the mergers and acquisitions space, is that you have smaller mining players on the continent with smaller projects coming together. So there's a consolidation play there. And the reason for that is that as a small mining player, you're less effective. So with the consolidation play comes economies of scale, the ability to consolidate licenses, and just more bargaining power. And we're seeing that with that, the consolidation of the smaller players, that's really playing into the security of supply. And we're also seeing, quite interestingly, and we've never really seen this previously, where the manufacturers down the value chain are starting to acquire actual mines, just to cut out the middleman, so that they can secure the supply of the raw materials. So we've seen that with a lot of businesses and companies in China acquiring mining assets on the continent to make sure that the security of supply again for their raw materials.
That's quite interesting. So do you think it's all about ramping up security of supply, or do you think it's also individual transformation drives of respective countries that are trying to get a lot of smaller players a bigger share of the value chain, or perhaps even a combination of both?
I think it's a combination of both. But really what we've seen is that with all the supply disruptions, a lot has happened. There was COVID, there was the Ukraine and Russia situation. The disruption in supply has really caused a lot of businesses to rethink how they do business. So I do think it's a bit of both, but definitely securing security of supply is a key driver of corporate action and M&A activity that we're seeing.
And from a risk perspective, is it better appetite from a bank like ABSA to finance such projects rather than single entities who are looking to increase supply alone?
Yes, what we're actually doing here at the Indaba, we're speaking to the smaller players and actually trying to bring them together to talk to each other. Because if they're together and they actually consolidate, it makes more sense for us as well, exactly from a risk mitigation point of view. Absolutely.
But just speaking to the broader challenges of such mergers right now as you see it, as a bank, just based on the kind of transactions that you're looking at on the table, what are some of the key things that you are seeing as financiers that are preventing certain deals from crossing the line?
Well, firstly, the green metals are hot. The prices are obviously at historic highs. So there's this massive value expectations gap between the sellers and the buyers. The sellers think, you need to pay what the price is today, and they're projecting the price is going even higher. But the buyers think, you can't really buy assets at the top of the cycle because this may be the top and maybe prices are coming off. So actually, there's a lot to be done, but we're seeing that there's no meeting of minds, just specifically around this price expectations gap, which is quite interesting.
No, that is interesting, because you do have quite a number of shareholders who have been active in the mining space talking about perhaps now not being the best time to go out and buy mines because of what commodity prices have done.
Exactly.
But other than security factors, what else do you expect to be a major driver of corporate activity, M&A activity specifically on the continent this year?
Well, of course, there's always this move for green metals, right? You saw Harmony bought a mine in Australia, a copper mine. So the reality is the energy transition is here, it's happening, and mining companies need to pivot out of the usual gold and PGMs and go and find these assets. So yeah, every day we're knocking on our clients' doors, showing them interesting assets. And I did a walkabout now here earlier, and yeah, there are a lot of interesting deals. The only challenge is that they're still in early development, and most of our clients are looking for more brownfield projects.
Sure. Yeah. But are you finding as an industry, perhaps not this is not banker specific, but as an industry that such transactions, particularly in the green metal space, attract better pricing, or do more elements go into the rate that a bank is able to finance a big project?
Yeah. Well, firstly, as you're aware, a lot of these transactions or where these metals are situated are in very risky areas. So we're finding that, you know, you need to know what you're dealing with. And definitely, as I was saying, the fact that we have this Pan-African presence does help us, and it does help us get our clients across the line when they're looking at these transactions.
Sure. Just wrapping up, I mean, in as much as you started the conversation talking about quite a number of activity that you're seeing, particularly amongst smaller players coming together to build scale. For smaller players who perhaps are listening in or watching this conversation, just your message to them about some of the perhaps the mistakes or stumbling blocks you are finding in financing such a smaller transactions, just helping them to improve, just given the fact that smaller players often cry about the difficulty in access to finance. But with that said, perhaps there's areas that they make in unleashing the capital from financiers like yourself.
Yes. Yeah, it is quite a challenge because unfortunately as a bank we do tend to, our preference is to get involved further down the line, and when you're a small player you need the capital at the beginning to develop the mine. My advice would be from the onset, you know, before you go any further, you almost need to always partner with a strong financial sponsor and there are people who specialize or players who specialize and play in that specific space, the early exploration phase. And then when the banks get involved, then that's their opportunity to exit. And being at places like these, the mining Indaba, these people do exist, they are here, and it's all about just putting themselves out there, and I think this is an amazing platform.
We're at an interesting time in SA Inc.'s lifespan. So if I think about it, you know, traditionally debt providers were providing a funding product. I think where we're moving towards is we're saying, I need to consider my clients' needs and try to help find a solution for some of their ESG sustainability goals, not just provide a debt product. So I think we've moved far beyond just simple vanilla products and trying to help find solutions for problems. And look, I mean, we all know where, you know, the energy crisis has led us to. You know, the mining sector, the president said, must take the lead in terms of finding innovative solutions for some of these problems that we're facing. And you know, I think historically we've been quite a resilient nation, and I suppose we just got to find a way is the message.
But on those demands, what is it looking like? We're talking about a just energy transition. We're talking about the move towards more renewables and away from fossil fuels. What is demand from some of your clients looking like for capital, and where are you seeing the most interest perhaps across the continent?
There's a massive demand for capital, and if we think about it, it makes complete sense. I think a lot of our clients are saying we need to sort of take the lead in terms of private power. We can't rely on the utility. I mean, if you look at Sasol, Sibanye, Goldfields, Anglos, all of these large mining and resources businesses are saying, you know, let us get into private power. Thankfully, the ministry, you know, last year sometime, you know, scrapped the licensing requirements for up to 100 megawatts. They've said, you know what, guys, move ahead. Take control of private power, and so there's a huge capital requirement to fund private power. So we're working with the independent power producers who are working with these large utilizers of energy to see how we can fund them and how they can, you know, facilitate a solution. So there's a lot of capital required. So renewable energy is the one sector that's absolutely booming in this market.
Okay. And does that apply for your business across the continent? Are you seeing a similar level of interest as in South Africa?
So SA in particular, because of our energy crisis, some of these other markets have had, have been a lot more nascent from a power and a grid capacity perspective. So this problem has persisted in their world for a long period of time. I think for SA Inc. it's a pretty new problem if I look at the last 2 years, and especially in the last 3 months, where this problem has now become a real issue from a sustainability perspective of ability to really access credible, sustainable grid capacity. So it's an issue, but particularly in SA, and I think a lot of the focus is on this market. because of the, energy availability factor has moved from sort of in the 70s to 49, which is what Mr. Mahantashe said, and that's a scary statistic, I must say.
Help us understand a little bit more, Chiten, in terms of ESG financing considerations, what kind of boxes are banks, financiers like yourselves, wanting a lot of these investors to tick before deploying the capital?
So let's take a step back. I think initially it was about the easy stuff, which was, a green loan. A client comes to us and says, I want to put a PV facility in place. That's easy to measure and identify. We said we've got to start innovating from there. So what we've done, and we concluded a really interesting transaction with Harmony Gold last year. It was a 10.4 billion sustainability linked facility. It was partially a green loan for solar PV plant and partially a sustainability linked loan where we said to the client, if you reduce your carbon emissions, reduce your water consumption, look at some of the social elements within your mining operations, and if you improve upon those, we will incentivize you with better pricing. And so we packaged this transaction, brought in a significant number of lenders, and it proved to be quite successful. And frankly, it was the largest sustainability-linked transaction. So, we're constantly trying to innovate. I suppose the next step for us is we're thinking about how can we support our mining clients through funding their suppliers. If their suppliers are coming with an interesting solution around the social aspect, the environmental aspect, even the governance aspect, so we want to go filter through right down to suppliers to our clients, so right through the value chain.
Oh, so it's interesting that you do mention the fact that in the case of Harmony, just looking at that example and saying that if you're able to reduce your carbon emissions by a bit more, it attracts better financing. So it's not just about deploying capital as a bank. You are measuring the impact after
Absolutely.
that capital is
and so we want to incentivize them in a positive manner and say if you achieve this, you will get you'll get a reduction in your pricing. But at the same time, if you don't achieve this, we're going to be quite tough on some of these clients and say, listen, but in that case, we revert to the norm. So hopefully that's enough of an incentive for them to say, it's worth us doing it, but not just from a financial aspect. I think a lot of our clients are saying, from a corporate governance perspective, from giving back to communities, we actually want to do this. It's something that's important to us. So the financial benefit is just a small part of it. I think it goes beyond that. Responsible corporate citizens.